Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist at WealthPress. Today is the 3rd of March. The market's going to open up in about an hour and 20 minutes. I wanted to give you a little view of the futures market. Dow's up about 164 points. Nasdaq is up 60 points. It looks like the market is bullish. Why is the market bullish? Well, let's get into the global economy report, and I'll explain to you what exactly is going on. World stock markets, U.S. futures rose Wednesday after Federal Reserve government said central banks are still far away from raising rates. Well, as you could see here, the 10-year note is already down and it's already dropping, and they could say whatever they want in terms of the short-term rates, but that doesn't mean they can control the price of the 10-year rate. That goes up based on the futures price, and right now it looks like it's going to take another leg down. And remember, there's an inverse relationship. There's a 100% inverse relationship between treasury notes and interest rates. And I told you after we made this low, we huffed and puffed, went higher, but now we're breaking lower. We're already up. We're already down 1.19. So while the Fed is not going to do anything with short-term rates, long-term rates, folks, they are going higher. And if you don't believe me, all you got to do is look at the treasury note and notice we bounced down. We made three higher highs, and then we're bouncing back down. And I'm expecting us to break this low, which means interest rates, long-term rates, and inflationary figures are going up. Federal Reserve government said central banks still far from raising rates. Yeah, you tell the 10-year note that. Expectations for strong economic growth in coming months have fueled worries that interest rates will be heading higher. You think so? Just look at this. Whoop. Yeah, you think? From 0.94 to 1.5. Remember, inverse relationship. Expectations, the yield on the 10-year treasury was 1.44 earlier and having traded up to 1.5 last week. And as soon as we hit this level here, guess what? We'll be at 1.5 again. Higher interest rates makes each dollar of profit the companies earn less valuable. Yeah, and you can also argue that that's inflationary, or a dollar buys you less, which is inflationary. That's making Wall Street reconsider the value of tech stocks, in large part because their recent dominance left them looking even higher than the rest of the market, or pricier. Treasury yield, and this is a great report, which is why I'm reading it verbatim, because it actually explains what's going on. Treasury yields have risen above 1.5 recently, with expectations for economic growth and inflation up from 0.9 at the beginning of the year. This is where we were in the beginning of the year. Look at this right here. This is 0.9, and then we broke down. Bonds broke down. And remember, the reason bonds go lower when interest rates go up is because every time more bonds are issued, they're issued at a different interest rate. So as interest rates go higher, the bonds that have already been loaned, the IOUs, they become less valuable because you can get better rates from the new bonds that are being issued. And remember, the par value is the same. So if interest rates go up, the yield goes down because the par value, the amount of the IOU is the same. So there's a natural differentiation between interest rates and the bond market. So interest rates go up, bonds go down. Interest rates go down, bonds go up. Bonds have been going out, down. Interest rates have been going up, which is what we're talking about. And the reason I'm spending a lot of time on this is because there's been a lot of talk about interest rates, bond relationships, so I wanted to talk about that. On Tuesday, Federal Reserve Lael Brainard sought to calm financial markets by emphasizing that the Fed, while generally optimistic about the economy, is still far from raising interest rates or reducing its $120 billion in month of asset purchases. Now, here's what I'm going to tell you. Interest rates, even right here, we're still at only 1.5%. We're expecting the yield, interest yield on treasuries to be, by the end of 2021, at about 2.5%, okay? Typically, the yield in the stock market, the earnings yield in the stock market is about 100 basis points, so 1 full point above the interest rate on the 10-year note. So if the yield on the 10-year note is pricing in future of 2.5%, and the stock market's pricing in 3.5%, that means, listen carefully to what I'm going to tell you. That means the stock market is completely anticipating higher interest rates, and they're already priced into the market based on the forward trailing 12-month PE ratio, which we can extrapolate the yield from because it's the inverse of the yield. And right now I'm telling you that the stock market is pricing in about 3.5 to 4.5% interest yield, and the bond market at the end of 2021, even if it goes to 2.5%, The stock market's already 100 full basis points above that, which is typically where it's at. So don't make a big stink about the stock market or the bond market. The stock market's already pricing in higher yield, and that's what this report is not telling you. Federal Reserve Chairman Jerome Powell is scheduled to speak on Thursday. At the end of the week will be government's job report, which I'm going to talk about right now, which is typically the highlight economic report every month. It also includes numbers, how much wage and rising across the economy, key component of inflation. So let's talk about this report. Last week, they had 49,000 people recovery in the labor market, recovered by 49,000. Look at this. It could be this week they're talking about a contraction of 100,000 or an expansion of 312,000. That tells me, these numbers tell me we are all over the place. And if we can do above 140,000 new jobs, that would be really good. And remember, this is a month delayed. The jobless claims, which comes out tomorrow, that's Friday's report. Tomorrow we have jobless claims, which tell us the unemployment from last week. And the numbers, again, looking anywhere from 715,000 new claims to 834. And we haven't been going down, and that's disappointing. So if this number is bearish, and if the employment situation is not so great, and I'm telling you right now, I'm not expecting it to be a big number. Look at the expectations. Contraction of 100,000, expansion of 312,000. Like, can we get a little closer? So anyhow, if we're below 140,000, the number's going to be bad. And unemployment rate, 6.2 to 6.5%. This is not good. This is actually very, very bad, because unemployment rates should be substantially lower than that. And the consensus should be a lot tighter than negative 100,000 to 312 positive. Negative, that's a 412 point person or 1,000 swing. 412,000 people swing. That's not a consensus. That's a shooting the donkey in the butt. Anyway, so that's the report coming out on Friday. But for now, markets are a little stabilized. I'm still concerned about interest rates, because if this keeps going down, it's going to put some pressure on the stock market. But again, as I said, the stock market's already pricing in higher rates. Now, again, futures are up right now. You've got the report. As far as sectors, I want to talk about 3 stocks right now, large caps actually, believe it or not, that are breaking out, and I want you guys to know about it. Now, a few weeks back, we were looking at the cumulative strength index, and I told you that Viacom, this company, started coming up on my scan. And I like to look at the top 10, 20 to see which ones are coming up on the scan. So if you go back 1 month, let me go back 1 month. See, Viacom is on the 4th place. Let me go back another month, December 24th. Where's Viacom? Do you see Viacom here? I don't see Viacom. But now, a week ago, that's even further. Let me reset this. Today, Viacom is in 3rd place. Last week, Viacom was in 3rd place. And I told you that this stock is going to make headways. It's going to break out because it's coming up and it's new on my screen. And sure enough, let's look at Viacom. Viacom, what do they do? Television movies. And look at the stock breaking out. I believe this is an all-time high. Let me see here. Oh, yeah, it is. Yeah, and the stock is looking really, really strong right now. Now, I like this stock quite a bit. I would wait for a little pullback, but I do like it right now. I really do. If you're going to go in, I would get in below 70, put a stop loss at the 60 level, give yourself twice the profit of risk, and you're good to go. Next stock, I've talked about this stock ad nauseum, Morgan Stanley. Remember, I told you, banks, not so sure about it. Investment banks, big time. They're making a lot of money right now. They're trading. They're making money through trades. They have investment banks, and they have a regular savings and loan style of bank. And Morgan Stanley has outperformed Goldman even. So I like the fact that it went down to the 50-day moving average. I like this breakout, and I like the fact that it's new highs. Morgan Stanley, Viacom, VIAC, and Morgan Stanley, definitely where you want to be. Now, this stock I told you about a year ago, and I still like it to this day. I like it even more now. Why? Well, let me show you what they do. It's Ally Bank, but they're not a traditional bank. They do automotive financial services. Auto sales are hot. I mean, hot. Leasing, inventory insurance, everything about cars. Car sales have been going through the roof. 1 year return this is a financial company, 69%. 69%. I love the stock, and I'm very bullish on it, and I love the fact that it's going through like a flat period. I like a breakout right here at about 44 and I would put a stop loss right at the $40 level. And I do like this right now. It's not over and extended, and I like it at this price. Out of all these three, I actually like them all. But if I had to say right now, Viacom may be a little bit overbought. I would wait for a little cool off. Morgan Stanley, I like it right now. I like the fact that it's gone through this sideways congestion. Remember, sideways, vertical, sideways, vertical. Those are the only two trends in the market. So I like Morgan Stanley right now. And I also like Ally right now. Why? If you look at Viacom, notice it's moving too vertically. And volatility is expanding a little bit. Not too much, but a little bit. But so I want to wait for a little horizontal trading action. It'll reduce my risk. It'll increase my profit to risk ratio. So you want to wait for a little pullback. So it can congest like this and then break out again. Can congest like this, but I would be buying it right here. Or it maybe cools off a little bit, but I would be buying it around the 62, 60 level. But in terms of Ally, notice again, congestion. Breaks out, makes a new all-time high, and then comes around, gives us a lot of congestion. Congestion lowers volatility. Lowering volatility lowers risk. Lowering risks and increase your profit potential. So again, because you can get into here and you'll know if you're wrong faster than you will here on Viacom. So I do like these three stocks, but I would wait for a pullback on Viacom. But I really like Ally, and I think they're in the right place at the right time, and I like Morgan Stanley quite a bit. Now, I've got something for you, so don't go anywhere. Folks, this Emmy-nominated journalist, he was sent a secret list from a former Wall Street analyst. Now, it contains controversial truth about some of the richest CEOs and executives. Emmy-nominated journalist, richest CEOs and executives? I like what I'm hearing so far. But what about what they're legally allowed to do to their own stock price? Interesting. This is very interesting. I want to hear all about this. I want to know from an Emmy-nominated journalist what he knows about the richest CEOs and executives and what they want to do to their own stock price. You probably have not heard anything about this because all of this activity is done behind closed doors. That's right. It's not for the public. But if you look away from the stock market and towards this secret sector, instead, folks, you can spot this quasi-legal activity up to 48 hours before the elites profit from their own moves. You've got to check this out. I mean, Emmy-nominated journalist, richest CEOs and executives, quasi-legal activity that's done behind closed doors. You've got to check this out. And this Wall Street analyst who put this list together, he's pulling back the corporate veil on the shocking truth Thursday, 1 p.m. Eastern Time. Folks, Thursday, that's tomorrow, 1 p.m. Eastern Time. You don't want to miss this. You really want to be there. My interest is piqued whenever I see Emmy-nominated journalist, former Wall Street analyst, richest CEOs and executives, behind closed door, quasi-legal activity, up to 48 hours before the elite profit from their own names or moves. I got to check this out. He's going live tomorrow, 1 p.m. Eastern Time. Do not miss it out. Thursday, 1 p.m. Eastern Time. And by the way, folks, just so you know, make sure to like this video, subscribe to this channel if you're watching on YouTube, and stay ahead of the market by being the first to be notified when we post new videos. And remember, Thursday, 1 p.m. Eastern Time, you've got to check this out. And I'll talk to you guys soon. You have a great day. Bye, everyone.